I'm Guy Swann. We have a really fun panel here. We're talking, the topic is pretty broad. It's the future of Bitcoin technology, which is about as broad a topic as you can get. But I want to hit a handful of different things. So actually, to start this off, I want to give me like a one-sentence introduction as to who you guys are, and let's just kind of go down the group here. Let's start with Dhruv.
My name is Dhruv Bansal. I'm one of the co-founders at Unchained Capital. We focus on multi-sig and Bitcoin financial services.
My name is Pierre Rochard. I'm the VP of Research at Riot, one of the largest publicly traded Bitcoin miners.
I'm Warren Togami. I am VP of Solutions at Blockstream. And about 20 years ago, I created what's now one of the largest open source projects in the world. So that was long before Bitcoin.
Wait, what is that?
Fedora Linux.
Oh, no kidding. I had no idea. That's awesome. I use Fedora. Okay. So I want to start this off with, what is your focus on Bitcoin technology right now? Like, when you project out in the short to medium term, what is the thing that you think is the most important next step for what we need to take advantage of, and the tool that essentially is going to accomplish that for kind of the next use case or the next market? Start with you, Dhruv.
Wow. Maybe I'll try to play my own trade by just saying multi-sig is really important. I mean that in a very general sense. Unchained, I think, is somewhat well known for offering multi-sig vaulting products and other financial services delivered through cold storage multi-sig solutions. I do think that's really important, and investing in better security technology for Bitcoiners is how we help keep them Bitcoiners for many decades. I think more advanced forms of multi-sig, everything from configurable vaults with timeouts or other kinds of structures that are well suited to products like inheritance, is really important. But I think multi-sig is actually way more important than quote unquote just cold storage. I think multi-sig thematically is sort of considered a security technology. It should be considered a collaboration technology. And that's why Unchained often calls our product collaborative custody and not multi-sig, because we're custodying coins with you. I think another form of collaborative custody is a lightning channel. We don't think of it that way frequently, but that's really what it is. It's a pre-agreed collaboration over certain coins with certain rules that are very different than a product you might get at Unchained, but it's another form of collaboration through multi-sig. I think I'm going to make the general claim that in Bitcoin, the way that we do collaboration, whether it's in an adversarial context, in a friendly context, in a financial services context, in an anonymous trading context, however we're collaborating, whatever the locus of connectivity between individuals is, multi-sig shows up. And so I think that's an important theme for us to get better at as Bitcoiners all up and down the stack.
Yeah, I agree with the emphasis on multi-sig. Fundamentally, Bitcoin, if we think of it as a company, it's not a startup anymore, right? Bitcoin at this point has product market fit. It has trillions of dollars worth of transactions flowing through it not every year, over the past year. And the emphasis should be on reinvesting in what we know people value in Bitcoin. So they value holding Bitcoin. Multi-sig is a great way to hold Bitcoin. We also see that they value transacting in Bitcoin. Whether it's small transactions or large transactions, there's even over the past few months of the bear market, we still see a massive number of transactions going through the Bitcoin network. So the emphasis, I think, should be looking at Bitcoin as a monetary system where we want the software to be as reliable and as stable as possible so that people can feel confident that this is a monetary system that is going to continue to endure and is going to be there for them, whether it's next year or 10 years from now. Right now in the markets, what we see is tremendous price volatility, all right? But if you look at the underlying technology of Bitcoin and the blocks that come out on average every 10 minutes, there is no volatility there, and the protocol continues to function exactly as we expect it to. So I think that the emphasis should be focusing on reinvesting in Bitcoin's fundamentals, what we know works. And then as a secondary focus, I also think it's really interesting to look at what will the future of Bitcoin's product market fit be. And there, I really think that payments makes a lot of sense, specifically through the Lightning Network. So the Lightning Network enables smaller value transfers that are just not economical at the base layer because we want to keep the base layer to be as decentralized as possible. We want to keep the cost of running a Bitcoin node as low as possible. So there are trade-offs between the different layers. And when we look at the other cryptocurrencies, they've taken trade-offs that really are starting to reveal themselves as profoundly misguided. So when we think about the future of Bitcoin technology, we have to keep in mind that there are constraints if we want Bitcoin to continue to be decentralized and to be successful as a stable, sovereign monetary system that is really serving its users.
So Pierre actually covered nearly all the points I wanted to make, but I'll speak from a developer's point of view. Bitcoin for stability and security, but it's not magic. It's because developers had been acting in a science-driven peer review process for years. And you may have heard about the so-called block size war, where people wanted to move fast and break things. If you don't have stability and security, you have nothing at the base layer. And now, as Lightning is growing, we also need that stability and security at the Lightning layer 2 level.
So I'm glad you brought up Lightning. Lightning is something that I've focused on a lot, and I literally use it essentially every day. And particularly in the context of small payments, it's amazing what you can do to incentivize people. It's in the Bitcoin community. Like I use it a lot in the Audionauts group for just kind of like fans of Bitcoin Audible. And I literally pay them to keep me off of Twitter and keep me from getting constantly distracted with everything. I will just, if they post articles that they're interested in to help kind of curate like my having to just explore and dig through all of the trash to find good stuff to read about, I'll just pay them 21,000 sats if they post something that I end up wanting to read on the show. And it saves me an unbelievable amount of time. And then I do the same thing, throw somebody 5,000 sats on Twitter. If there's like some ridiculous sounding story, I'm like, please, somebody post the source. I'll pay you 5,000 sats. And it's been surprising to see how many people will actually go get a Lightning wallet when they're in that situation. They're like, all right, I've never even done this before. Where do I post my invoice, you know? But those like small incentives, I think the liquidity and the adoption of Lightning is kind of getting to a very interesting place where certain use cases that didn't make sense early in the bootstrapping era now do, because now they can quickly sign up and offload on Cash App or actually pay through Cash App, accept it, you know. There's a huge variety of options, and the payments are far more reliable today than they have been. And it's starting to look like we're entering a new phase where there's a whole lot of use cases that now suddenly make sense. And maybe actually, I'll turn this right back over to you, Warren. Like, what do you see as kind of, like where is your focus on Lightning specifically? Like moving forward from here, like what's the next step on that?
Well, again, from a developer's point of view, I'm most concerned that Lightning is reliable and secure.
Yeah.
I've also been concerned that the most difficult part of using Lightning is balancing your channels. And while this is supposed to be a decentralized network, we've somehow built all of these centralized coordinators and points that are collecting rent. The people use to balance their channels. But like the next step to bring Lightning to end users is probably going to be a mix of like people are. You want people to be self-custodying and to be self-sovereign and in control of their keys and their channels directly, but that's difficult and expensive for end users, and as a result, like more and more people are using custodial wallets. That makes it reliable, fast, relatively cheap, but
There's a trade-off.
Yeah. So there is kind of like a middle ground there with FETI, which I'm personally not sure is a good thing. Yeah.
There's
Yeah.
so there's actually like a really interesting middle ground in that context that I'm increasingly excited about, because it's easy for me to offload even someone who does manage their own node and channels and loves to tinker with some of that stuff. I also really appreciate the things like the ideas like Greenlight and Voltage and these other things that will essentially host a front end for you, but you still own the encryption. You still essentially hold the keys behind it. They're just your node connection and stuff. Do you work at all with the Greenlight stuff specifically?
Yes.
Yeah.
Okay, so long story short, what may work like best for end users is that if you have like really small amounts, like using a custodial might be convenient, but like that's not a safe future for Lightning, and using a self-custody option like Greenlight or Voltage is a little bit more safe. Yeah.
Well, it trades or it shares the potential risk. Your risk in Lightning is being offline in a large degree. You're trading time for security, and in doing so with something like Greenlight or Voltage, what you can actually do is have it so they're just like you're hosting servers or whatever. For somebody's website or something, they're simply hosting the instance to make sure that your node is online, whereas they don't have control over your funds. They have control in the short term on actually having it online. So if they go down, you're essentially sharing that risk. You're taking the lowest hanging fruit and making sure it's more reliable and provided as an actual service. But on that, actually, it gets me thinking back to one of the points that you brought up was how the new Bitcoin technology, how Lightning Network and how we interact with these things and the security trade-offs and constant issues on making this a reliable like foundation for stuff is how it changes how we think about the technology around it. How it changes how we think about normal like just DNS and potential vulnerabilities and the devices that we use. Like so Dhruv, since you specifically brought this up while we were chatting earlier, how do you think it changes how we deal with the technology around all of our other communication mediums? Because now we have this incredibly important, purely informational value mechanism that we have to protect.
Yeah, I think Bitcoin has always been about creating the correct incentives. Something that is, I think eventually you get to in your understanding of Bitcoin is that so much of the rest of the world is poorly incentivized because it's difficult to send people value quickly and easily in the modern world. The modern world is so interconnected, yet up until Bitcoin, there was no way to pay somebody without involving a government, a bank, etc. I'm not even talking about the challenge of writing the software. I'm talking about the infeasibility of making the payment to begin with. So it's interesting, like we talk about distribution, but really what distribution means is market-driven. Market-driven means that people are incentivized to take actions, not merely disincentivized by punitive causes, but like actually incentivized by the ability to make money. This requires being able to make payments online somehow. So it's very hard for us to build distributed systems without some kind of distributed money. Distributed money has to be the first distributed system that ever gets built. And that's what Satoshi provided. Once that system exists, though, it is possible for us to build things on top of it. Lightning is one of the most important things that we can build on top of it because it corrects, if you like, or accounts for a lot of the trade-offs made in the design of Bitcoin to begin with. That Lightning can operate at a fantastically higher scale of throughput and complexity than Bitcoin can, because it makes different trade-offs, specifically in regards to custody and a lot of the things we were just talking about. But the lesson of Bitcoin, in my view, is not that we need to use blockchains or that cryptography is the savior. It is the idea that markets can be incentivized to deliver services where no one is particularly in charge of that service delivery. And when we think about other human networks that we've built, whether they're networks of transportation, networks of energy, networks of manufacturing, logistics, your question is really about telecommunication networks and the way that we route information. The pattern that has always existed is someone, a centralized player, has to go out there, make a massive capital investment, build the network, and then they charge rent on it. Railroads to HTTPS, it's the same thing. What Bitcoin teaches us is that if we're able to pay people without a centralized third party in the middle, if there really exists a peer-to-peer currency, then we can create peer-to-peer incentives, which cause us to be the network builders. I think this comes out really relevant in like sort of the discourse today around Elon Musk and Twitter, not to kind of get into the news, but the town square is not something a company will ever build. The town square is built by the townspeople. And the problem is they need technology to be able to incentivize each other properly. So Guy could always have paid in dollars folks to source content for him, but the fact that he can do it through Lightning makes it easier. Like Warren's describing a financial incentive problem. Like Lightning, as we're growing it, is developing points of centralization out of necessity. To me, that just says we haven't figured out how to correctly fine-grain the market in that area. An analogy you might offer is the idea that Bitcoin mining pools are very, very centralized, despite the fact that Bitcoin is a distributed service provider. There are solutions and strategies for solving that problem, but Bitcoin, even almost 15 years later, is still struggling with being fully distributed. It's not surprising that Lightning is much younger and I think much more complex and difficult project, to be honest, from an engineering perspective. It's no surprise that Lightning is also struggling with the incentive structures that should cause distribution in the points of coordination that are required to render the service at scale. But these are all solvable problems. Like we will discover and build markets that decompose those services and get it to the point where Lightning is much more distributed than it is today. Like in that future, when that world is here, the kinds of things we can deliver then on top of Lightning are unlimited. It's not just for payments, it's for routing data, it's for connecting human beings. It's a new infrastructure for building all sorts of other networks to deliver other kinds of services at scale without central points of control. So I think it's extremely important, the work that Warren and team and everyone else who's working on Lightning is doing.
I have to ask Pierre before we run out of time here. How do we bring the vibrant JPEG market to Bitcoin, and how many blockchains do we need for it?
That's a great question. So, going off the problem with incentives, I think that in the wider crypto industry, there's a very strong incentive for building technology that separates people from their money. So, for example, DeFi, tokens, NFTs, right? These are ways of getting you to spend your Bitcoin on other projects. And the incentives are there because obviously the builders want to take your Bitcoin from you. If we look at what are technologies that are actually encouraging people to hold their own Bitcoin, I think that is dramatically underinvested in. And there's far too little focus on it. In fact, some people just find it boring, right? They find it boring, this idea of building technology that helps people hold Bitcoin. We're really grateful to have companies like Swan that see that this is actually where there's tremendous value. Companies like Unchained as well and Casa. We saw that Swan recently acquired Spectre, which is software that allows you to do multi-sig with your own hardware wallets and your own Bitcoin node. So there's tremendous amount of work to be done at the layer of connecting your Bitcoin node to your own hardware wallets, and also connecting your hardware wallets to wherever you are acquiring Bitcoin from. So all of this to create a seamless user experience so that people don't accidentally shoot themselves in the foot and lose their Bitcoin or get robbed or anything like that. It takes a huge amount of really nuanced product design and engineering work that is, I think, exciting, but when we look at the wider industry, the incentives are skewed against that. right? The incentives are to have you put your tokens inside of a browser extension and to go gamble on DeFi and monkey JPEGs. So I hope that there's going to be continued movement towards figuring out how do we build solutions for people who just want to hold Bitcoin and do that in a really reliable way.
You had a thought?
So I think the crypto industry, over and over again, you've seen people like create a new network and they sell yet another token that is supposed to enable some use case. But I think that at its most basic, what Bitcoin is strong at is savings technology. And what we should be valuing in society is people doing their own job, adding value to society and savings without worrying about the government debasing the currency. And along those lines, I really appreciate things like Heat that have really brought to light the farce of crypto that is, you don't need to invent and sell a new token to enable decentralized applications.
Yeah, that's one of the most valuable things that I think the how and what they're building exactly with slash tags, with Keat, with essentially the platform that enables all of these things is essentially a way to create peer-to-peer applications, and then having Lightning embedded into this makes it so simple to create an environment and a market where I can easily just pay someone micropayments to essentially help be my host without actually having it. Almost in a sense with the voltage and the green light situation is I have someone who just seeds my encrypted instance so that it's reliably there, but I'm never actually subject to having to trust them in the sense of like accessing the information. It's all directly behind my keys. And essentially my seed can be this entryway into just kind of my online environment and the tools and applications that I use. And the idea that you need a blockchain it becomes entirely redundant. You know, the token immediately just becomes this economic failure or this economic weakness, where if the speculation of the token goes away, well, then how do you prop up the infrastructure? Like if you have to have a money for the utility. But I just want to get final thoughts really quick on just what does the future of Bitcoin? What's the biggest hope to you in where things are headed, and what's your current excitement?
Maybe just to support everything I've heard in the last couple of minutes, I think there's a famous saying, like people they overestimate the effect of technology in the short term and they underestimate the effect in the long term. I think it's Amara's law or whatever. I think you could adapt that to the cryptocurrency and Bitcoin world. You can say that a lot of people overestimate the impact of shitcoins and altcoins and their blockchains in the short term, and they underestimate vastly the impact of Bitcoin and Bitcoin companies and Bitcoin-focused events like this, I think, in the long term.
What really gives me hope with Bitcoin technology is it giving its users more freedom. We see Bitcoin's competitors give their users less freedom, right? So if you go stake on Ethereum, you can't unstake your ETH. So these other, and that's just one of many examples of systems that enslave their users, whereas Bitcoin gives its users freedom. And that's really what gives me hope about Bitcoin's technology.
It's as simple as hardworking savers have a way to be protected. That's it.
Yeah. Hell yeah. Yeah. So the topic, the future of Bitcoin technology has an unbelievable scope, and it is constantly changing and it is constantly moving, especially in the bear market. Some of the stuff that has come out just in the last couple of months is so exciting. I highly recommend, if you are not following these people on stage, to stay up, because this is a never-ending conversation. And also you should listen to Bitcoin Audible. We talk about some stuff on that show as well. So I want to thank all of you guys for coming up here. and all of the things that you do and build for the space. It is really a fascinating and awesome thing to be a part of. So thank you guys. I appreciate it.